welcome. You're watching Ask Profit. I am Mahima Vachrajani. With me is Alex. In terms of the markets, it's fairly a better day as compared to yesterday, definitely for the markets. In terms of the benchmark indices, Nifty 50 is trading flat at around 0.04% higher. In terms of the bank Nifty, that's under pressure, down by about 0.2 odd percent. The broader markets are doing fairly well. The small cap 250 is up around 0.1 odd percent. The mid cap 150 is flat at the moment. In terms of the Nifty 50 heat map, let's pull up that and see what counters are buzzing in trade today. Well, it's almost even Stevens there in terms of the advanced decline ratio. There's Tata Consumer, Jio Finance, Shriram Finance, Bharat Electronics, Bajaj Finserv, some counters that are under pressure, some counters doing well. There's JSW Steel, Zomato doing well, up by about 1.5 odd percent. IndusInd Bank, despite of the negative news inflow, it's up around 1 odd percent. Infosys, Trent, Tata Motors, some counters doing well in trade today. In terms of the sectoral heat map, let's pull up that and see how our sector is faring in trade today. Well, in the morning, it was the Nifty Realty and Nifty FMCG which was under pressure, but right now, Nifty PSU Bank, the Nifty Finance, the Nifty Bank, all have turned towards the red and are seeing pressure in trade today. Nifty Metal is leading the entire pack, is up 0.7%. Nifty IT is also up around 0.8 odd percent. Nifty Auto doing fairly well in trade today, up by about 0.4 odd percent. In terms of some stock specific action, let's pull up the BSE 500 and see what are the counters buzzing in trade today. Well, a couple of counters that are buzzing today. There's something like Avanti Feeds on the back of its earnings. Good set of numbers this particular quarter, doing well in trade today. MMTC also on the back of its earnings, up 12%. Welspun Corp also doing well. Strong guidance by the management that's pushing the stock overall higher. There's Asai India, ITI saw significant gains yesterday as well on the back of its earnings, doing well today as well. There is Polyplex Corp, which is down by about 5.7 odd percent. Suzlon Pharma, FDC, RH Magnesia also had its earnings today, down by about 3 odd percent. So all of these counters under pressure. In terms of any particular stocks, Alex, that is standing out in the entire space for you, are you seeing any particular stock that's buzzing?
So a few stocks in insecticides. India was on my list. It's it was doing well. I wonder if it continues to do so. Yeah, there you go. So it's up about 5% or thereabouts. And Bata was under pressure at the start of trade on the back of another weak quarter. It continues to be there, though it's been a bit of a choppy day of trade for Bata overall. Welspun Corp, and this is a pipes company, remember, and it has quite a considerable amount of revenue that comes through from overseas, from the US, and metal pipes is what it sells. It's a very good quarter for the company, up about 9% in trade today, and all of those stocks in focus, of course. We've spoken about IRCTC as well in the past couple of hours, and another good set of numbers, and it's lost ground. Of course, remember that this is a counter that has been in focus in the recent past as well. Let's see if that continues to gain. But we've got Mr. G. Chokalingam, who's the founder and managing director of Economics, joining us this morning, as well as Kush Bora, founder of kushbora.com. Gentlemen, thanks so much for taking the time and good morning to you. Kush, I'll come to you first since it's monthly expiry. How would you trade this at this point, or would you wait on the sidelines while there is some semblance of direction that you find? Because we've seen quite a topsy-turvy couple of sessions where there's a ping-ponging, if you can call it that, intraday for the benchmark at least.
Sure. First, very good morning, everyone. I think for the day, it's not a bad idea to stay on the sidelines. Like we saw yesterday during the closing session, the 24,800 straddle is very much at play, but the call concentration is practically double of what's there on the put side, and hence you're seeing some cooling off from the opening highs that the markets have made. As far as the medium-term outlook goes, I think that still remains bullish as long as we hold on to the 24,500 and the 24,600 support zone. What we've seen today and perhaps in the last couple of days could be impact of some global volatility, and also the expiry that we are seeing today. I think this is a good opportunity to create positional long trades. The risk reward ratio is now fairly favorable. 25,000 remains the first target on the upside. Also a very strong resistance zone. But once that is taken out, you're looking at a 25 to 50 kind of level also on the upside. So all in all, from a medium term perspective, I think this is a good opportunity to start creating longs. today, because of the kind of concentration that we're seeing around the 24,800 mark for both calls and puts, it's a possibility that the expiry could be in a range of about 100 to 150 points from there.
All right, so that's a view. Stay on the sidelines today if you're a relatively shorter term perspective. In any case, in the long term, the India growth story, I don't need to tell you about that, and neither do my experts today. We've got Rahul calling us from Chandigarh and asking about Godrej Properties, I believe. The first caller of the day, Rahul has called us on the number that you see at the bottom of your screen, and you can do that as well if you want to speak to us. Alternatively, you can send us a message on the number on the top of the screen. Rahul, very good morning to you. How can we help you today?
Good morning. I have 2 shares of Godrej Properties at 2250.
Right.
And I am looking to invest more or add more, but I'm not sure what are the right levels to invest, because the stock has been falling down since last couple of trading sessions.
Okay. So let me get you an update. By the way, I don't know if you watched our earlier shows, but we discussed a note that came through from Morgan Stanley on the real estate space, and it speaks about a few stocks in which it is overweight. It's changed its positioning on that. It's equal weight on Godrej Properties. It was earlier overweight, and it has cut its target price to 2,400. Let me go across to Mr. Chokalingam on this one. Mr. Chokalingam, on the real estate space as a whole as well, but specifically on Godrej Properties, the question is whether the momentum that they saw in FY25 can continue into FY26. Certain tailwinds exist in the form of the rate cuts that have taken place, as well as the next rate cut that could be in the offing in the month of June.
Yeah. So it is possible to maintain the momentum in growth, but only concern is that even with this current momentum, the valuation looks quite stretched. My personal preference is for DLF, because DLF has got a lot of land on its own, which can take care of development for at least for another 2, 3, 4 years, and I would prefer DLF.
That's where Godrej Property stands. The next question is from Narendra, who's writing in from Surat. He's a senior citizen and he's bought 10 shares of Trent at 7,500 a piece from a longer term perspective. And he's saying that he wants to buy more at the current market price and wants to know if that's the right thing to do or not. He's sitting on a loss of 18,000 rupees. The stock is currently trading around the 5,600 odd levels. Mr. Chokalingam, I'll again come to you on this one. What's the outlook like for Trent? Do you think he should add more and average out at the current levels?
At best, I would give a whole recommendation for 2 reasons. One, valuation is quite stretched, and secondly, the structural change which is happening, shifting the sale of goods, from physical store to online, ultimately it will have some impact on Trent as well. So I would prefer, the sectors like banking, within that PSU banking stock like SBI, where I get the confidence that the business as well as the profit can grow in double digit in FY26. Even beyond that. So therefore, I would prefer banking stock like SBI to Trent.
Okay, preferring SBI over Trent is the view coming in from Mr. Chokalingam. Our next caller, Ravi, is calling in from Hyderabad. Ravi, a very good morning to you. How can we help you?
Yeah, very good morning.
Hi, Ravi. Go ahead with your query. Yeah.
My query is on Canara Bank.
Okay.
So is it a good time to buy Canara Bank and I can hold for 1 to 2 years, or shall I wait for a couple of days for a correction?
Okay, got your point. I'll take this up with Kush. Kush, what are the charts indicating for Canara Bank? Do you think this is the right time to make an entry?
Sure, it is not a bad move at all on this one. In fact, after SBI, as Mr. Chokalingam already mentioned, after SBI, if there is one stock that I like in the PSU pack, it is actually Canara Bank. The stocks had a good run. It's had a sustained up move. Major and minor averages also taken out. But what it's also done in the last couple of sessions is that it's taken out the resistance near the 107, 108 mark and is comfortably trading above it. I think from a year to 2 years perspective, about 125 to 140 are the targets that we could look at. And on the downside, 100 is a good support zone, not only a psychological one but also a technical one. So maybe just under that, about 99, 98 thereabouts is where he can place a stop loss for it, for an investment bet as well. So for targets of 125, 140, Canara Bank, after the kind of moves that it has made, is still a good buy.
Kush, coming back to you on a question from Pakshal Jain, who's writing in from Bellary, and asking about BEML, which he's bought at levels of 4,400 rupees per share. 15 shares are bought, and the stock is trading below the buy price at 4,260. He's got a time frame of 1 to 2 years, so not a very short-term time frame. What are the key levels that he should watch out for, and should he hold on to this?
Yes, he must hold on to this one. The reason being that, the stocks recovered rather well. Now, the only small issue that, I see here is that 4450, 4500, close to his buying price or maybe just above it is where the resistance sets in. In fact, if you see for this week, what's happened so far is that the high is also close to the 4430 mark. But on the whole, the momentum has been good. The volume action this week has picked up dramatically. So I think he could very well continue holding on to this one, keep trailing stop loss near the 4050 mark. Once this 4500 level of resistance and the supply zone is taken out, I think the stock could see a further sharp up move to 4650 and 4800 levels as well. So I think this is a good turnaround story that we are seeing from a price action perspective. Keep a strict stop loss, but continue holding on. Momentum will pick up after 4500 is crossed.
Okay. All right. So that's the view on BEML, and hopefully that answers your question. Binod is calling us from Chennai. Very good morning, Binod. How can we help you today?
Hey, hi. Yeah, I have Tata Chemicals for quantity of 300 at the price of 892.
Okay.
So I just bought it for fundamental view. Like I see there is a huge value considering the Tata Sons holding.
Yes.
So what is the I would just want to know the view of the experts on the fundamental and technical view for the near term for 6 months.
For 6 months, you are okay. So, but fundamental view is something that you would need to hold for slightly longer than that. Are you comfortable holding more than? Yeah. Okay. So Mr. Choklingam, Tata Chemicals, a whole array of products, and the question really is whether you think that the chemicals pack and Tata Chemicals specifically has gone past the troubling phase. And if I remember correctly, the Q4 numbers weren't great for Tata Chemicals.
Yeah, you are right. I think valuation is stretched, and the chemical business, commodity business will continue to have more stress, at least for another 2-3 quarters. That's my strong view. So at best, I would give a hold rating on Tata Chemical. I would suggest a buy only if stock falls at least about 10% from here.
That's with regards to where Tata Chem stands. Our next caller, Saif, is calling all the way from Saudi Arabia. Saif, how can we help you?
Yeah, hi, good morning. Wanted to talk about the shares of delivery.
Okay.
I'm holding around 620 shares at the average rate of 371.
Okay.
And I have got very long-term perspective about this share, maybe around 5-10 years.
Okay.
Since I firmly believe in this company. My question is it a good time to add more aggressively, or should I add slowly, gradually? This is what my question is.
Okay, I got your question, Saif. I'll take this up with Mr. Choklingam. Mr. Choklingam, first of all, your view on delivery, considering how it did in terms of its FY25 performance, and your take on entire logistics space, because the entire sector has seen significant headwinds. What's the view like?
Yeah, Delivery is a great company, no doubt. The great team with a lot of experience in the logistic came and set up. But it has been quite a great struggle to, show any meaningful growth. And if you look at, the earnings, which is just around 2 rupee for full year of FY25, it is trading at an extraordinary high valuation. So I would prefer to give a premium valuation to stock like, Blue Dot rather than to delivery. So I would prefer, Blue Dot. And also this space I'm quite optimistic because oil price is down about 22% from the 52-week high. I believe that oil price is likely to remain weak, at least around 20% lower than the 1-year high. And that should also be positive. And also the e-commerce, many other things which are happening, structural changes, also positive for this kind of business. So I'm positive on the sector, but I would prefer Blue Dot to delivery.
All right. All right. So let's take the next question. It's from Vijay, who's writing in from Shillong. And Vijay, I must say that I love your name. Orchid Pharma is the name of the counter that Vijay wants to know about. 1,160 is the price that he's bought it at and is looking for a 1-year time frame. Should he add more, hold or sell is the question. The stock is at lower circuit as things stand right now, so selling is not really an option as we speak. But what's the view, Kush, on the charts?
Well, I'm afraid I'll have to give him the bad news. The structure's not looking great. The stock's actually fallen off a cliff, at the start of this year, and ever since has seen, sell at any kind of price. As you rightly said, right now the stock's locked into, a lower circuit, so selling will not be an option. But the broad view on Orchid Pharma would be an exit. There is considerable selling pressure that is ongoing, and as I said, every rise has been taken as an opportunity to exit out of the stock. So Orchid Pharma at the moment is a very clear sell.
Charts looking structurally weak for something like an Orchid Pharma. The next caller, Govind, is calling in from Hyderabad. Govind, a very good morning to you. How can we help you?
Yeah, very good morning, madam. Very good morning, Alex sir, and all of the team.
Good morning.
Sir, actually, I have invested 10 lakhs rupees for Coromandel International.
Okay.
I think the company fundamentals are strong, and this is also agro business, and the monsoon is also correct. What is the technical view, madam? Is it right time to enter or a little bit expenses? Because of this is the 52-week high company actually there. Last 6 months the rally is going on. Is it right time to enter, ma'am? I can invest 10 lakhs, ma'am, for 1 to 2 years.
Okay. Just want to understand, Govind, this 10 lakhs might be a significant part of your portfolio, right?
Correct, ma'am. Already my portfolio size is maybe 60 lakhs actually.
Okay.
This is also new interest to invest actually.
Okay, got your point, Govind. I'll take this up with Kush. Kush, do you think investing 10 lakh rupees out of a 60 lakhs portfolio right now is advisable to invest in something like Coromandel International?
So firstly, I believe that, this is a slightly high concentration of one stock, in the portfolio. So that's something that, he should look at or reconsider. But given that, he's already made up his mind, what I would suggest is accumulate in a staggered manner. While, yes, I completely agree. And, even we've initiated, a call on Coromandel a few times, and, the targets have been hit more in more cases than not. The medium term and the long term structure for Coromandel remains fantastic. It's just that from a near term perspective, as you're starting to see, there is some cool off from 2,500 odd levels, some negative RSI divergences, and the momentum indicators pointing south. So there could be a possibility that the stock could dip to about 2,300, maybe even 20 to 50 kind of zones. So my suggestion would be to start accumulating Coromandel in a staggered manner, and within the 20 to 50, 2,300 zone is where he could start deploying, and then as the stock rises, he could gradually keep adding on more in an SIP format than anything else. But on the whole, the structure looks really strong for Coromandel. Near-term profit booking cannot be ruled out.
Some profit booking cannot be ruled out, but the structure looks positive is the view coming in on where charts are concerned for the counter. All right, the next question is from Pradeep, who's writing in from Bengaluru. He's also a senior citizen who's investing for the next 3 odd years. He's holding 100 shares of Berger Paints bought at 500 a piece and wants to know if he should hold or book profits right now. Mr. Chokalingam, I'll come to you on this one. In the entire paint space, Berger Paints is the one which is outperformed significantly, even in terms of volumes, pricing, plus gaining in terms of market share as well. What is the outlook like? Should he continue to hold from now?
See, paint industry as a whole is going through a difficult time, as all of us know. The only saving grace is that, as I mentioned earlier, the steep fall in the oil prices, which has helped. If you look at a comparative valuation, yes, Berger Paint has done well, but it is trading at around 54 times the trailing PE. And if you look at the recent deals also in terms of EV to sales, they are whatever the media speculated about the deal which is open in the media, it's around 3 times EV to sales, whereas the Berger Paint is trading at around 5.5 times EV to sales and over 50 PE. I think it is more than priced. I would be a seller of Berger Paints. I would not be able to suggest a buy.
Okay, you would sell right now. All right, so that's a fair call based on the fundamentals. There's quite a bit of pressure, competition coming through in the paints space. Viral is calling us from Mumbai, I believe for the second time, if I'm not mistaken. Hi, good morning,
yes,
Viral.
I did. Hi, good morning.
And if I remember correctly, you did ask about Reliance Infra the last time as well.
Correct, I did, yes.
Yes. Okay, so can you, I don't have that good a memory, Viral, but can you tell me the last time you spoke to us, what was the price that we spoke about?
I think it was 290, 288, something like that.
Yeah, so in the interim, you've made a lot more money. What would you like to know about?
I would like to know now, henceforth, now what the company had issues, all that is the past. Now, henceforth, going forward, what with the debt going down, and a lot of things have taken place in the company. So, what do your analysts think about the future of the company?
Okay, so Viral, I'm going to ask Mrs. Chokalingam. I'm not sure if he has coverage, but Mr. Chokalingam, very large quantity of 153,000 shares held by Viral, and if I remember correctly, the argument that he had was that he studied the land bank, he studied the value of the assets, and on the basis of that, he has decided to take an overweight on this, and it has borne dividends for him. In that, the stock has done well for him. He's gained quite considerably, sitting on a profit of more than 1 crore. So, if you looked at the fundamentals, what would you have to say about this?
Frankly speaking, it is very difficult to make a quick research and give view. This kind of companies needs at least about 4 to 6 hours, which I have not done. So I am very sorry that I am not able to give any view on the stock.
That's not a problem, sir. And I appreciate your frankness and honesty. But Viral, what I'll do then is I'll try and get you Kush's view on the charts. Kush, he's bought at levels of 244.4. That's his average holding, but he's got 153,500 shares specifically, and he's sitting on a gain of more than 1 crore. What is the advice going forward?
Well, I think he could very well continue holding on to this one. Since the last conversation, from there up until now, also the stock's actually gone up. There isn't, any kind of overheating. In fact, in the last 2 to 3 weeks, the accumulation on this one has been fairly strong. The volumes, have crossed the, weekly averages of the last, 20 odd weeks averages as well. So I think, the story seems to be intact. On the way up, it is now coming up to a resistance of 330. Beyond that, you would see a rounding bottom formation breakout, and the stock could further accelerate to about 350 and then to about 365 odd levels. So at the moment, no overheating. In fact, some signs of accumulation. So all in all, and it's got a few things going for it technically as well. But as I generally do, I would suggest a trailing stop loss near the 295 mark. That's the support. If indeed it does fall to that, not a bad idea to at least take some money home book partial profit.
So that's with regards to where Reliance Infra stands. The next question is from Sanjay Trivedi, who's holding Sincom Formulations at 22 a piece and wants to know as to what should be the next course of action for this particular counter. It's fairly a small company, 2,000 crore market cap, and is a global pharmaceutical company that manufactures healthcare products. Kush, I'll come to you on this one. What are the charts indicating, and what are the resistance and support levels that you're seeing?
So the stock's seen a good run up in the last 3 weeks. Some momentum seems to be waning off, on account of profit booking. But, as you rightly said, a fairly small stock, not a very active track on this one. What I would suggest is a stop loss near the 19.5 mark, and, keep, or rather, you might want to exit the stock near 24 partially and 26. Those are the levels on the upside where you want to exit. But, given the nature of the volatility that the stock has, 19.5 should act as your strict stop loss. So hold a 19.5 stop loss and exit around 24 and 26.
Okay, so that's it with regards to where Sincom stands. The next caller, Dheeraj, is calling in from Hyderabad. Dheeraj, a very good morning to you. How can we help you?
Good morning, ma'am. My query is regarding NetWeb Technologies.
Okay.
I'm holding 87 shares of NetWeb Technologies at 2014.
Okay.
Where I bought these shares today.
Okay.
So, should I hold on to this position, or should I shift to something like TCS at current levels?
Okay.
Is my query, ma'am.
Okay, I got your question. I'll take this up with Mr. Chokalingam. Mr. Chokalingam, what's your view for something like a NetWeb Technology, and should he shift to TCS instead?
Network, even after the crash, it is definitely quite stretched in valuation. So I would sell if it improves further, even 5%. But option of shifting to TCS, yes. If investor is a very defensive in nature, then TCS is a good buy from defensive perspective. But then the export of IT services are expected to grow only in over 2 to 3 or 4% in dollar term. I don't think large IT companies like TCS is going to create any significant wealth even in the medium to long term. So I would recommend other sectors like M&M in auto or SBI in banks or DLF in real estate. Where these three sectors, in my view, give a strong outlook for the growth.
Next caller then. Harish is calling in from Visakhapatnam. Harish, a very good morning to you. How can we help you?
Good morning, madam.
Good morning. Go
I'm
ahead with
having
the query.
300 shares of REC Limited
Okay.
at 495.
Okay.
Can I average at this rate, today's rate, 404?
Okay, I got your point. Harish, I'll take this up with Kush. Kush, I know you're not a very big fan of averaging out, but what's the view like where REC is concerned?
I think you'll have to prize me for consistency, at least if nothing else, right? So no averaging recommended. The reason being that while the stock is starting to show some positivity, it's rebounded from 365 odd levels. But if you see on the weekly basis, the 20-week falling trendline resistance is acting up. The stock's not been able to cross that, and you're seeing some selling coming around at every rise. So unless and until it crosses the 450 mark, which I know is still some distance away, but that seems to be the near-term resistance for the stock. Unless it crosses that, I think the sideways momentum could continue, and he'd be deploying his capital and blocking it up for some amount of time. So any fresh additions should be considered above the 450 mark. It will probably distort his buying price from the current levels, as in if he averaged now. But no, I believe averaging on the way up is way better than averaging on the way down. At the moment, the stock seems to be in a consolidative phase. I will give a hold view on this one with a stop loss near the 380 mark, and any fresh buying or averaging should be considered above the 450 mark.
Okay, hold is the view and average out if the stock moves beyond that 450 mark. All right, with that, it's time to slip into a very short break, but we'll be right back answering more queries on the other side, so do stay tuned.
That's huge. That is a biggie. It's on deck.
Gold Plus Clear Glass. Bar हो या नियर, सब कुछ दिखे clear.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve.
Welcome back. You're watching Ask Profit, a show that gets all your stock-related queries answered. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that will be flashing on your screen right now. All right, the next question is from Vijay, who's writing in all the way from UK. This question is for you, Mr. Chockalingam, particularly. He wants your particular views on Scient Limited and wants to know if the fundamentals are attractive enough to make an entry right now. Mr. Chockalingam, what's the view like?
Yeah, definitely. We have a buy recommendation on Scient. In fact, Scient is one of the few stocks in which I have extraordinary conviction. I may be wrong, but I believe that it's a fabulous stock at the current price. I personally do not own. We have not invested in the stock, but we have recommended to our clients. Why I am so confident is that, first of all, the stock is down close to 38% from 52-week high. Of course, that doesn't guarantee the return. But if stock is good, such a steep fall makes the valuation also attractive, because valuation is a function of both price and earnings. The second most important fact is that in terms of comparative valuation, this is the cheapest stock. I also look at, apart from PE, the enterprise value to annual revenues, because a lot of deals which happened from 2014 to 19, they happened around 3.5 times enterprise value to annual IT revenues, and this stock is trading at less than 2 times. In terms of PE multiple also, it is one of the cheapest among the peers. And the third reason which I like is that, at a consolidated level, it has got 3 business verticals. Apart from IT services, it has got an engineering business through Scient DLM. It also started 100% subsidiary for semiconductor business. So it's quite diversified across technologies, which is very rare to see among many mid-sized IT companies. And because of these reasons, and also considering its balance sheet, I like this stock most. I feel it is one of the most high conviction stocks in our research coverage.
Okay, so buy is the view on Scient Limited from Mr. Chockalingam. All right, let's shift focus and pull up TVS Supply Chain and see what the stock is doing in trade today. It came out with its earnings and revenue was up 3%, EBITDA up 2%. Margins took a slight hit and net loss came at around 3.9 odd crores. To discuss as to how Q4 has gone by and what is the outlook for FY26, we're joined by Ravi Vishwanathan, MD of TVS Supply Chain, and R. Vaidyanathan, Global CFO of TVS Supply Chain, joining us. Welcome to both of you, gentlemen. Mr. Vaidyanathan, I'll take the first question with you. Considering how FY24 has fared, because when I was seeing the trend of your financial, your CAGR growth has been at around 10% where your top line is concerned. How has the performance been like, in your opinion? Was it up to your expectations, and how much of an improvement are you expecting in FY26?
Yeah. FY25, we finished with a loss of profit of about 29 crores as compared to the loss of about 9 crores in FY20. That's a significant turnaround in our operations. And if you look at Q4 specifically, we reported a profit of 13 crores as against loss of 15 crores. There's a huge improvement in our profitability in Q4. And we expect this trend to continue. As we said, one of the divisions, which is called Integrated Final Mile, has turned around the operations, and we made an operational profit in Q4. So we expect this trend to continue in FY26 as well, and that is very good for us from a long-term perspective. Apart from that, we are also looking at a lot of other options in terms of right-sizing and right-shoring of operations, taking significant costs out from the business. So this will help in increasing the profitability as we move to FY26.
Okay, I understand. There was a bit of a contraction in the margins. I'm just trying to understand what the implications are for the current financial year as well. Just to give our viewers and your investors also a sense of what to expect. Mr. Vishwanathan, can you take us through why that occurred? What are the pressures that you're facing, and does that ease up in the first quarter?
I think it's again, I just want to stick with the fact that we see very strong growth drivers. We have had 9% growth year on year, 24 to 25. We see a very positive momentum going forward because we have significantly swung in the Q4, and Q4 as we exit, we are exiting with a very strong momentum. We spoke last quarter about a potential large deal that we were going to sign. we are very happy to announce that we did sign that with a very large UK retailer. It's about 1,000 crore over a 3-year period. So, large contracts keep coming in. We have last year signed up with 24 Fortune 500 customers as our new customers. Our Fortune 500 clientele has gone up from 78 to 91. So I think all of those indicate a very strong revenue trajectory. Why these folks specifically about a lot of the opportunities when it comes to right shoring, right sizing, a lot of things that we have already initiated in Q4. And you would have noticed that we have charged about 5 crores towards redundancy in Q4. We expect that initiative to continue in Q1 and Q2, and we would see the benefit of that accruing Q3 onwards. So from a growth story or from a margin expansion position, we are extremely well placed as we exit the year and enter the FY26. And I think we are very confident that as we continuously grow on the PBT trajectory, we will be able to get to a 4% PBT in the near term.
And the point that you made on the big client wins and the new business added in the fourth quarter is well made, sir. Can you give us, therefore, a projection or some indication as to how you see top-line growth based on what you've said? And
sure.
While you were talking about what your expectation was for the fourth quarter, that did pan out. And so, therefore, can you give us a sense of what's going to happen in the first half in terms of new client addition, new business that you're trying to achieve?
Typically, we get about 10 to 11% of our revenue coming out of new businesses that we have won, and we see that trajectory only improving based on the orders that we have signed the later part of this year. This particular contract that I spoke about, that will start yielding revenue from the second half of the year when the program will get beyond the startup phase. So we aim for a double-digit growth in revenue, Alex, and we'll continue on that trajectory. We are very bullish about the fact that we hit the double-digit revenue growth in FY26 and beyond.
And Mr. Vishwanathan, can you give us a range of that double-digit growth?
I wish I can. The only thing that is constraining this is you're all aware of the headwinds that are potentially with the tariff situation, right? There is huge volatility in the global freight business, which is a fairly about a 25% component of our revenue mix. We are not able to quite see because the winds are blowing both ways. We saw significant dip in volumes and in pricing in the last quarter, but we see that volatility right now with a surge in volume, but also a mismatch in terms of capacity and containers because there is a moratorium on the tariff and people are rushing towards shipping, I guess, in one of the lanes, specifically China-US lane. So there is a concentration of containers and shipping, I would say, capacity that lane. And we are seeing constraints. We probably may even witness a surge in container price, which has been actually on a steady or decline over the last few quarters. So that probably, precludes me from putting a number on it. But look, I think the key is when I look at the pipeline, when I look at the orders that we have won in the last quarter, we are very confident that we will be double digit, hopefully, upward of the mid-teens. But, I will hold that prediction until I see the wins from the global freight business and the macro, especially on the tariff-based trade policy shifts.
Fair enough. Mr. Vaidyanathan, my next question is to you. You have a diverse customer base, but almost 70% of your revenue comes from industrial, automotive, and tech. Just wanted to get a sense as to how the margins are different in these three segments. And are you planning to increase concentration in any particular segment where margins are higher?
I think integrated supply chain solutions, which is our primary segment, I think we have a healthy margin. We generate about 9.5-10% there, and our focus will be on integrated supply chain solutions segment. The network solution segment, which is the integrated final mile, as I said earlier, we turned profitable in Q4, and we will start seeing the profitability in FY26 as a sequential.
Okay. All right. Mr. Vaidyanathan and Mr. Vishwanathan, thank you so much for joining us at NDTV Profit, and all the best for FY26.
Thank you very much.
All right. With that, let's move on with Ask Profit. Our next question is okay. The next question is on BEL. Lucky from Ahmedabad is holding around 150 odd shares of BEL, bought at 285. Wants to know if he should partially book profit, and the view is from a longer term perspective. Mr. Oklingam, I'll come to you on this one. What's the outlook like for BEL?
I think it is a very good price to book profits. Valuation company is not there at all. So I would give a strong sell call at the current price.
Do you concur, Kush? And I appreciate, Mr. Choklingam, that you've taken that call, because the run-up that we've seen in these defense stocks has been furious. The index as a whole from the 28th of April going up by nearly 30%. So, Kush, would you concur?
Absolutely. In fact, I would perhaps suggest that, book partial profits. The only reason for that is that, while they are overstretched, as Mr. Chokalingam mentioned, on the valuation front, they are overstretched on the technical parameters as well. It's just that, there is no sign of the momentum abating. So while the momentum is still strong, you might want to perhaps, ride it out. So yes, book 50% right now. But what you could also do is hold the rest of the position with a trailing stop loss near the 375 mark. Even if it dips to that, you'll still exit in a profit. But if there were a further upside to 400 levels or higher, you might get an opportunity to ride that.
All right. So we've got Hariom Karnal from Haryana who's asking with a smiling face. And I appreciate that. Thank you so much for the kind words. Whether he should pick up Vatech Wabag at the current price for a period of 1 to 2 years. Kush, on the charts, what's the view?
Looking fairly strong. There has been a fair degree of consolidation around the 1250, 1300 mark. The stocks actually started to move up. There were multiple resistances near the 1500, 1550 mark. This week it's taken that out on the back of fairly good volumes. I think this momentum is here to continue. I wouldn't be surprised to see the stock head to 1780 odd levels in the coming next few weeks. Once that is taken out, perhaps 1900 also. So a good positional bet. You're seeing a golden crossover of the 50 and the 20 DMA, suggesting that the near-term strength is very much picking up. Positional stop loss for this one comes close to the 200-day moving average at 1500. So yes, looks like a good entry point for Vatech Wabag from a positional standpoint.
Okay, the next question is from Mani. He wants to know the target price, he or she wants to know the target price of K&R Constructions. Bought 359 odd shares at 220 a piece. Coach, I'll come to you again for this one. What are the charts indicating for K&R Construction?
You know what? It'll not be a bad idea to actually exit it right now. The stock's actually not going anywhere. Any bounce that came about till 235, 240 has been sold into multiple times. And, even when the market is showing any kind of jump, this stock is actually not participating. So since, there is still some bit of profit, I'm assuming, or very close to the buying price, it's perhaps a good time to exit at the moment. So K&R Construction would be, an exit from my side.
All right. With that, let's cut across to CI, AGM and Annual Business Summit of 2025.
I now invite Mr. Sanjeev Puri, President CII, to present the memento to Mr. Rajesh Kumar Singh, Defence Secretary, Government of India. I request Mr. Baba Kalyani to present the memento to the Vice Chief of Army Staff. And may I now request Mr. Chandrajit Banerjee to present the memento to Secretary Defence and R&D and Chairman DRDO, please. May I now request the Honourable Minister and all the other dignitaries to please stand up and come forward for a photo opportunity.
All right, that was the CIAGM Annual Business Summit 2025. With that, let's move on and take the next question. Nitish Kapoor is holding 100 odd shares of PFC at 420 a piece and wants a 3-month view on this one. Kush, I'll again come to you. PFC, what are the charts indicating?
Well, he could hold or perhaps buy afresh if he hasn't already, with a stop loss near the 385 mark. The only small concern here is that the stock is going flat for some time now. The momentum indicators are also flat, but the bias is mildly positive. So yes, from a 3-month perspective, with a stop loss around the 385 mark, for targets of 430 and about 445, PFC can be considered for a long trade.
View on Suzlon Energy, if you bought at levels of 63, would you hold on or add more units? This is a question from Shrikant. Kush, what's the view?
No, don't add more. You could very well continue to hold on to this one. Keep a stop loss near the 59 mark. I think the momentum's just starting to pick up. I see the first resistance coming in at the 69 mark. Once that is taken out, I think there are further upsides to be had up until 75. So yes, continue to hold. Keep a stop loss around the 59 mark. Don't add more because it's coming up close to the resistance zone. So once it takes that out, is perhaps you could add some more for for the last bit of momentum play.
Another company that's buzzing on the back of its earnings is GIC. My colleague Harsh spoke to the company's chairman and MD. Listening to what they had to say about the quarter gone by.
I want to first start off by understanding how Q4 has gone from your lens. What were the takeaways and how is the strategy playing out?
Sure. So I think when you look at Q4 by itself, it does look as if, we did not do as well as we did last year, which is a fact. But the fact remains that, in our kind of business, looking at it quarter to quarter, honestly doesn't work. Simply because you may get a loss or a catastrophe happening in a particular quarter, which did not happen last year, which probably happened in a different quarter last year. Which is why I've always, tried to tell analysts and people with whom I discuss these things that when it comes to insurance and reinsurance companies, you must actually look at us from an annual perspective. So to come back to your question, one, whether the Q4 was better or bad compared to last year, yes, it was definitely worse. But then that was due to two reasons. One, you would realize that there was a catastrophe that happened in Los Angeles in the US, which had wildfires in the first week of Jan. So obviously we had some losses from that. But then we've also provided for it just to ensure that, later on these losses don't develop, which normally in the US market, there's a tendency to happen. So even though the loss figures that we have is close to $38 million today, we've actually provided for $150 million of losses. So I believe going forward, we will get some releases in the year 25-26 from these losses. Second, where we changed was in the life business, where we again increased provisions. The losses haven't gone up, but we have increased the provisions, keeping in mind how these losses will play out in the next few years. Because life is a long-tailed class, it goes on for 25-30 years. So rather than taking a shock in the later years, we have provided very conservatively this year. And looking at how the business pans out in the next 2-3 years, we will decide whether to strengthen it or have releases in the business. But honestly, on an annual basis, I think we are very, very happy with the way the year has gone. Last year, in April, when I had spoken to analysts, I had given them an advisory that after 3 years of consolidation where we shed our business, loss-making businesses, we have started our growth journey. And I said that we would grow by about 10%. Actually, we have done better. We have grown by about 10.72% for 24-25. More importantly, when investors and analysts wanted to know how we would reduce our combined ratios down closer to 100, I had said that this is not a one-year thing. This is a journey. It will take a few years, and we would strive to bring down our combined ratios by 2% every year for 3 years, and then by 1% for the next 4 or 5 years. And actually, we have done much better. Our combined ratios have come down by 3% this year. Loss ratios have come down by 4%. And if you look at our profit before tax, it's actually at around 8,765 crores, which is a record for GIC in its 53 years of existence. So honestly, the way the business is panning today, I think the glory days for GIC is ahead. I think we should be bettering ourselves year on year going forward.
Right. So I'm going to try to unpack this a little bit. First you spoke about how you've increased provisioning in life insurance. Talk to us about what has changed. What has made you take that step?
See, basically what happens is we look at how the market is behaving, the loss ratios in the market. Especially post-COVID, we have been looking at it very, very carefully to see whether there are any spikes coming in. Today, a lot of life insurance companies also do health. So we need to be careful to understand that whether the business that we have taken on board, whether we have provided for it enough. Because in the insurance and reinsurance industry, provisioning is very important. Especially if you look at something like life or motor third party, for instance, these are all long tail classes. The claims will come and hit you possibly in motor third party, maybe 6-7 years down the line. In health, it could, again, long tailed health, it could be longer. In life, it is, typical policies are 20, 25, 30 years. So you need to ensure that you have provided enough for it today, for the business that you write today, so that 15 years down the line, if there is a loss, you have enough money left to pay for it. You're not paying from the money that you're earning at that point of time. You're paying it from the money that you've actually got for the business that you've written. So that is where on the provisioning side, GIC especially has been very, very careful. Like I told you about the Los Angeles wildfires. If I go purely by the losses that have been advised to me by my business partners in the US, it is currently at about $38 million, and that is completely booked in our system. But then actuaries look at it differently, saying that going forward, so we look at some of the past events that have happened in the US. Has it, has the provisioning gone up or has it come down? When initial figures were, say, 38 million for a similar loss earlier, did it go up to 50? Did it go up to 100? Or did it come down to 20? Because at this point, we have not paid any money out for the Los Angeles wildfires. They are all kind of, the outstanding losses in our books. So I think provisioning is important. And within GIC, we are very, very clear in our mind that our provisioning has to be proper. And we ensure that, these kind of losses don't come back and hit us 2 or 3 years down the line.
So completely taken. In terms of life and motor, I wouldn't expect a reversal, but would you expect a reversal with regard to the Los Angeles number? Because if you've over provided, then likely next year your number will be much better than expected. That's the first part of my question with regard to loss. The second part with regard to loss is life and motor is this going to be the regular run rate now, or have you provided for past periods also and you've upfronted it in this year? What exactly has happened there in terms of quantification?
Yes. So to come back to your point on the other two, the later questions that you brought out on motor and life, I think the kind of shock is done. We've kind of looked at it afresh for all the years that we are writing, and we have taken a call. So these are not really, so in life especially, this is not for the business that we wrote in 24-25. The provisioning is more for the business that we wrote possibly 10 years earlier, where suddenly now we possibly over the last 2-3 years saw that the loss ratio for that particular treaty or for that particular piece of business suddenly went up. It could have been for many reasons, but then we said that, ideally we should be provisioning for it, keeping in mind the higher loss ratios that we have seen in the last 2-3 years, so that going forward, that doesn't affect our profitability anymore. Coming on to the Los Angeles thing, this is my personal view based on, the discussions I've had with some of the business partners that we have in the US, that ideally it should be well within $100 million for our losses. Like I said, we have already provided about $150 million. Whether the release will happen in 25-26 or it will happen in later years will honestly depend on how the claims get paid in the US for the Los Angeles fires this year. If it happens fast, then the releases will be faster. If we find that it is taking a little more time because, surveyors are taking a lot more time to understand the loss and paying it, then obviously we will keep our reserves till the time we are clear in our mind that we don't need to provide for it anymore.
All right, so that was the management of GIC speaking to NDTV Profit and laying out the path going forward. And that brings us to the end of this edition of Ask Profit. Mahima and myself, of course, from both of us and the team that put this show together, thank you so much for watching. Up next is Know Your Company. Do stay tuned.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The markets move fast,
and so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. The markets move fast,
and so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research,